consider this a professional courtesy.
Hello, everyone, and welcome to another edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California, member of the National Association of Realtors. But please, don't hold that against me. Welcome back to it, everyone. I hope you had a fantastic weekend. I had a rather busy one myself. Enjoying a little mocha here as we get the show started. We can count on a caffeine-fueled show today. As always, the best ways to get in touch with me are at the website. Find that at therebelbroker.com. From there, you can send along any ideas, suggestions, observations, questions, whatever might be bouncing around in your noggin. Feel free to send it my way. If you would like to join the Rebel Underground, send the word Rebel Broker, text the word Rebel Broker to the number 44222. That's text the word Rebel Broker to the number 44222. There'll be a follow-up response, so you know you're talking to the right folks. Send along the information requested, and you're in. You can also join the drawing for an Amazon gift card. It's a $50 Amazon gift card, something we do every month. We just did our drawing on Friday for this month, which was a little later than we usually do it. Usually I like to try to do it within the first week or two, so not horribly late, but just later than usual. So that's all done. You missed it for March. You can absolutely make it in April, though, because we're going to do it again next month. Simply go to the website, therebelbroker.com, go to the very tippy top of the page, click the big red button that says take the survey to support the show. Give the same email address both times you're asked, answer a few demographic style questions, and you're done. And you've helped me grow the show, and you've also potentially earned yourself, won yourself, a $50 Amazon gift card. Now, congratulations to all the folks who have won so far, and good luck to the folks who have yet to win. All right, folks, we're going to chat a little bit today about something it's really kind of concerning, and it's also kind of confusing. One of the things that I try to do on this show is to apply a little, well, at least from my seat, and you all can disagree with me and give me feedback. Sort of a common sense, at least, I hope common sense, maybe, if I'm totally off base, I want to know, approach to various problems. And we try to do that because we like to think that there is common sense in the things that affect it, right? And specifically today, we're talking about new home sales or new home building, construction. Because the numbers are not good. The numbers do not reflect us getting a whole lot of homes this season, at least not new ones. I've gotten an awful lot of inquiries from buyers and from sellers, but nowhere near enough to even put a dent in the current inventory shortage, right? So let's be clear about that right now. We've talked a little bit about the expectation that the numbers of folks willing to list their homes. Now, and just let's set the stage before we even go there. We all understand where homes come from, right? If you're going to go out into the marketplace and you're going to do a search and you're going to try to find a home, they fall under the new construction category and the existing homes category, right? Or homes people live in and homes nobody's ever lived in, right? So there's really only two places from which we can get more inventory, either build more homes or more people who own homes need to move, right? And we, over the years, because this has been a multi-year phenomenon, have been trying to figure out why it is that sellers are not selling. And a whole lot of what we've come down on really pins to uncertainty, right? Because if you're going to sell, typically you have to buy in the same market. So since there's so little inventory, it's not just a question of whether or not sellers are worried they're going to pay an inflated, because here's the mentality, right? The buyers, sellers and buyers fall into a lot of different categories. And one of the categories that's always been kind of robust on one end to get more homes into the marketplace have been folks who are downsizing, right? You reach a certain age. I'm practically there, right? My kids are almost out of the house. I don't need a 5-bedroom house. For just me, which is what it's shaping up to be real soon, right? And the timing is also good because I am also, if you've been listening to the show for a while, you know that I'm of the opinion that we are about to hit another downturn economically. And I'm not 100% sure where it's going to come from. We've talked about and the thing that's scary about that is you have tons of places to choose from in terms of where it could come from. Everything from it could come from lending again, because we've done shows in the past laying out how lending has been primed to have the exact same problems all over again. If we were to give it the same life cycle, we would expect some of those lending things to go nuts in 2020, right? We talked about that last year. So that's number one. Number two is pensions. Pensions are completely nuts. There's no rationality in what's happening with pensions. Pensions are virtually bankrupt, and the ones that are in the deepest trouble are now assuming the way that their books are going to get balanced is their investments are simply going to make them more money, which is completely nuts. Most of them assume a 7%. Now they're going to say it's going to be 7.5, where they've never even made what they originally said they were going to make, 7%, right? So, I mean, the things that could screw us over, rampant inflation, right? Printing up tons of money. There are tons of different things that could throw us into a creepy economic position, right? All right. So with that as a backdrop, how do we solve our housing problem? Because the housing problem is not, and I still see articles coming out and claiming this, sanity, at least in some corners, has kind of beaten this down, where the logical solution to the problem was to facilitate people being able to borrow more and more money, which is what got us in trouble last time. There does seem to be some voices crying out against that, but so many people still want to say, well, we need to facilitate more people being able to buy. No, that's not what we need to facilitate. I'd argue that just get the hell away from the market and let the market do its thing. But right now, what we need are more homes. So let's talk about this, first of all, from the shortage. We'll go ahead and lay out some data, and then maybe after the break, we'll wax philosophic about what needs to happen in the housing market. Now, we've got 3 articles that I'm going to throw out there for you today. The first one is from Calculated Risk. Housing starts decreased to 1.236 million annual rate in February. Housing starts. Privately owned housing starts in February were at a seasonally adjusted annual rate of 1.236 million. This is 7% below the revised estimate, and it's 4% below a year ago. So we have, and think about last year. Were any of us really dazzled by the number of homes that came online last year? No, I don't think we were. There was a nice sort of tidal inflow of homes last year that felt good. Remember, if you've been a listener for a while, back then I was also doing reviews of the new homes coming online. We were talking about where they were in terms of average price for the communities where they were being built. Because remember, the year before that, it was all about the more expensive homes. You couldn't find a home being built anywhere near the average cost of a property in those communities. It was all high end. Then last year, we saw builders saying, hey, we want to cater to first-time buyers. We want to facilitate creating more inventory for people to choose from. And we did get a few gestures, not huge ones, where folks were building entry-level housing last year. A lot of those claims got pushed as if they were going to continue, but that has started to wane. We started to see properties really coming out at the high end again. And it's not even really the fault of the sellers, the builders. There's just so little out there that even stuff that might go on the market at a reasonable price doesn't, because there's nothing else. So the competition for these properties is ridiculous. In terms of building permits, privately owned housing units authorized by building permits in February were at a seasonally adjusted annual rate of 1.29 million. That's a 5.7% below the January expectation, but it is 6.5% above February of 2017. Single-family authorizations in February were at a rate of 872,000. That's 0.6% below the revised January figure. And here's the bigger picture, right? We can talk about this compared to last year, and compared to last year, it's not good news. If all you're worrying about is what comes out, and remember, we're talking specifically now about new home construction, we're not there in terms of just dealing with the closest data, right? We've talked about demand over the last 2 years. We've talked about how little new homes are stepping up to fill that demand. But if we take a look at historically where building has been when there's this level of demand, we're at less than half of where we should be. Now, there's an awesome chart associated with this article. I'm going to go ahead and post it to Pinterest, but look at that chart for both the total starts or one structure starts, whatever you want to compare it to. We're ridiculously anemic. Now, one good thing about this chart is it's also going to show you periods of recession and then what happens between those two. And there's typically this level of growth. There's some areas where that doesn't happen. From January of 91 until January of 2002, where there was another recession, very kind of steady growth, no big peaks. But then from January of 2002 until January of 2008, where they're putting here that the recession kind of started, I'd argue it actually started earlier than that, is where you see it actually peaks in 2006, which is absolutely accurate, and then just drops to this ridiculously low level and doesn't really recover. We're nowhere near where we need to be in terms of satisfying demand as it relates to construction, new construction. So you can look at the chart, you can see for yourself. It's a mind blower. And again, it's posted to Pinterest if you want to check it out under Real Estate Reality Shows. So check that out and see what you think. But it blows my mind that we are where we are and we're not seeing more homes being built. And I'll tell you, I'm trying to figure out why, because I'm trying to figure out what would make more homes get built. Now, one theory I've put out is that it is simply so expensive in some markets to start building that it's just not a good risk-reward calculation for builders. I would love for a builder who listens to the show to reach out to me and give me some insights into this. I've talked with developers. We had a developer that we interviewed actually on the show a month or two back. And they saw slowing down. They saw builders being less motivated to move in and do this work. But I'm wondering why. The demand is there. So aside from the things we've already discussed, and for those of you who are new to the show, things we've discussed, for instance, since 2000, the costs relating to building a home, the regulations, the fees have all skyrocketed. It's ridiculous how much more expensive it is, which is one reason why in today's world, if they do construction, you tend to see it at the higher end. There's simply more money to be made at the higher end. One of the things that we discovered over the course of doing this show and doing research into what various areas do is it was probably about 2 years ago when we first talked about communities in California that if you're a builder, you're expected to pay a $100,000 per house premium when you build. When, of course, the builder isn't going to eat that amount of money. They're going to simply increase what they charge for homes. And this was before the downturn. This was when the state was seeing how much money was being made in the real estate sector and got hungry for that money and decided to extort it. A lot of people don't get that this isn't $100,000, period. This is $100,000 simply on top of everything else. So all the money that they were required to do local improvements leading to the community that they agreed to when they got their permit, all of the regulations they had to comply with, all of these other things are in addition to that amount of money. So when you're paying more and more and more for a new home, at least in California, that's why. Now, I don't know anyone who believes that if we went back to 2000 level regulations and fees, that we would suddenly get unsafe houses that aren't fit for anyone. If that were true, folks would be adamant about only looking for homes that were built after the year 2000. And it's just a lie. The idea that a home is less qualified to be a home if it was built by year 2000 rules. And if we went back to that, the cost, the barriers to entry for builders would reduce to such a level that I think it would completely rejuvenate the building sector in California. I think in a lot of communities you would see builders storming back to get involved in the real estate industry. But why aren't they now? With all the demand, with the super low inventory, there's just nothing out there. All of these units are selling out. Let me give you a good example of one that blew my mind. So a brand new condo development got built in downtown Morgan Hill, which is my ground zero, right? It's where I live. It's where I love doing business. I love the city. It's a great town, right? It's a great family style town. But this thing is on the railroad tracks. It's not near the railroad tracks. It's on them. It borders the railroad tracks. I think it's a 6-story unit, and these things all were sold before construction was done. And these things were selling for $700, $800, almost $900,000 a pop. That is nuts. That is absolutely, unequivocally crazy. And the other things I'm seeing sell are nuts as well. Now, let me give you an example of something that's nuts in terms of me as a real estate person having to plan for clients. So this isn't a typical experience, but in a recent listing appointment I went on probably a month ago, I had sellers who want to move, but they're very far away from that, or they were at the time. They're moving out of state. They're having a house built where they're going. So they're kind of coordinating all that, right? And in my head, I'm realizing, you know what? If the market keeps going the way it is, this market analysis I'm doing today will be $30,000 short of what they'll be able to list it for when we finally actually put it on the market. So these are things I had to explain to them. The market is going absolutely crazy. Now, I obviously keep up with what's going on in the marketplace. And one other thing that's working for them is there are no other homes under $1 million with their square footage and bedrooms and baths and all this other stuff. The market is insane. And any builder who looks at that clearly, absent anything we might know about regulations, sees that, right? They can see the opportunity, but clearly there's things they know that we don't know. And they're either afraid of jumping in, or the costs involved, the math just doesn't work in terms of being able to have them build stuff. All right, we're going to continue this conversation when we come back, but don't go away. We'll be right back after this.
Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner, broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909.
Welcome back, everyone. We are trying to get some perspective on why the hell don't we have any inventory? And where are we going? What can we expect from the upcoming season of 2018, which is, we're right on the heels of it, right? So what can we expect as investors, as buyers, as sellers? What is the market going to be looking like for us this season? And it's pretty clearly going to remain a pretty dramatic, at least in my marketplace, a pretty dramatically lopsided market towards sellers. I was hoping, praying that we were going to see lots of new construction this year. I thought finally maybe builders would realize the pent-up demand for homes and jump on board. But it hasn't really happened. In fact, we were just talking about the current permits, and I like permits. I think permits is great data because it removes the BS from the equation, right? If someone really believes that things are going to go well in building, they build, right? So this is one of the first things you do when you're going to build. You get a permit. You start building a house. The other element of that equation is the builder confidence levels, right? And I've often pointed out over the years how there's a bizarre disconnect sometimes between those two things, where we will see, I believe last year was a good example of this, where we saw dramatic increases in builder confidence, but decreases, or no, excuse me, it was the year before, 2016. Where we saw increases in builder confidence, but declines in the actual amount of permits, declines in the amount of architectural billing, all the things that would communicate to me, hey, builders are planning to build, right? Because if your confidence is up, that must mean you're planning to build, right? Well, no. So I think there's also an element of what they want the public to believe is going on to boost up what folks think about the real estate market or what's going to happen in the market. But right now, it's actually declining. It went down to 70 in March. according to the National Association of Home Builders, as reported through Calculated Risk. And remember, I always include links to these stories in the show notes. So if you would like to see these for yourself, please feel free to head over to the website, therebelbroker.com. There should also be links in any show notes through any venue. So I make them part of the general notes. So if you're in iTunes, Spreaker, however you're consuming it, these things should be in the show notes for that show. So feel free to take a look at those. Quote, builder confidence in the market for newly built single-family homes edged down 1 point to a level of 70 in March from a downwardly revised February reading. So not a huge change, but a trend, right? We don't. And what's interesting is this is really interesting. If you compare the graph I just told you about a minute ago in terms of what's actually getting built, and then you overlay this National Association of Home Builders housing market confidence chart, you will see that while we are at about the same levels of confidence as were present at the peak of the last real estate market, when we were building tons and tons of homes, despite confidence being at the same level, we are building at less than half the rate. Now, how does that make any sense at all? And if that's true, what is the other element? They feel confident in terms of, I guess, people being willing to buy or buyers coming out. That's clearly been demonstrated now for several years. So they've got confidence that this stuff is all good, but it sure doesn't seem to translate into more homes in my marketplace. It sure doesn't translate into more homes in Silicon Valley. So what's holding them up? Now, we talked before the break a little bit about really there only being a couple of different things. It's either got to be fear. In reality, they're not as confident as they're saying. They're concerned about something happening. Now, why they'd be concerned now, I don't know. These are all numbers that come out after the new tax plan's been released. There's less uncertainty in terms of what's going to happen moving forward with taxes. Typical folks, on average, have gotten a nice boost to their income. So what's the deal with that? The other side of it is the regulatory side. In other words, talking about the regulatory landscape just being so oppressive that builders are just not interested in going into those marketplaces. And my market would be one of those. Now, maybe your market isn't. Maybe I can get folks out there showing me where homes are getting built. Now, I know there's also been a lot of excitement about parts of the South in terms of, not just in terms of this kind of stuff and building new properties, but also just generally return on investment, investor, things that would draw you as an investor. I'd love to get some data on what's going on in those states in terms of building, what's happening in those regions. Now, we do get some regional data here. The Northeast rose 1 point to 57, the South decreased 1 point to 73, and the West fell 2 points to 79, and the Midwest dropped 4 points to 68. What's interesting is the Northeast rose, which kind of surprises me with some of the things that have been going on in real estate news there. But it's interesting. Two things are interesting about the South. One, it's the second highest number. The West fell to 79, but the South decreased to 73. Why is there that disconnect? Why are these numbers just don't? I'm trying to find a right path here. I'm trying to find data that I can pull out and make some decent decisions based on, and I'm just not seeing it. All right, so we've covered it from the confidence standpoint. We've covered it from the what's actually being built standpoint. None of those are really giving us good answers. Next, what are we going to see in terms of people putting their homes on the market, right? If we can't make things move in the build a house world, and I've been hoping something would happen there for an awful long time, but it just hasn't. So something needs to change in the minds of sellers. Now, we talked about these numbers earlier. We've talked about them over the course of the last year, and we've seen this year more confidence on the part of sellers in terms of selling their properties. Now, is that going to equal more listings? Now, it may. Anecdotally, my experience on the ground is I am getting far more people reaching out to me about selling their home at this time of the year than I did last year. But here's the problem. I've also ramped up my advertising as it relates to sellers. So how much am I offsetting my data through the fact that I'm putting more effort into that? So I'm hesitant to call it a trend in my area, simply because just by looking at the market in general, I'm just not seeing a huge amount of volume coming onto on inventory at all. Now, the other truth is the folks I'm talking to right now are not interested in listing right now. These folks want to list in late May, maybe June. These are folks who have kids in school, who want to move, etc. Again, still unusually more folks who are leaving the state than going to somewhere else within the state. The numbers have actually flipped. I used to see about 70% of people kind of staying in the state and 30% going somewhere else. And it's actually the opposite now. Now I see about 30% staying, 70% who are talking about moving out of the state entirely. That's a whole other show though. But where does this come from? Where do we see this start to happen? And I'm not seeing it. I'm not seeing us getting any relief from the new home construction world. And if we just look at trends I'm seeing in terms of what's actually being listed, not just my who's calling me about listing my house type numbers, because remember, I think that's probably skewed a little bit right now. I honestly don't see that happening either. I don't see folks who own homes deciding now is the time for me to sell. The only thing, and particularly because I think there's also, at least in my market, an element of, holy crap, my house just keeps getting more valuable every single month. Now, for anyone who's ever gone onto Zillow and provided their email address and claimed a home, you're getting email addresses, emails every month from Zillow telling you how much your home has appreciated just over the last month. So if anything, what that might equal is if we are seeing folks in a mood to where they're going to sell, we could see a late blooming market of pre-owned homes on the market. It might be folks who are saying, you know what, I honestly do feel like we're at the top of something. It would be a good time to move. But I'm going to wait. I'm going to hold off until we kind of hit that premier moment to sell, which is right there in the June, April, May, June timeframe. But I'm really going to be interested to see what kind of listings we see coming onto the market right at the end of May. That'll be when I think, for me personally, I'm looking closely to see if we see a statistical change from last year. If we don't, if we continue to see very, very flat performance, this could be another crazy year where we just don't have enough homes on the market. So what do you do? If you are a seller, maybe it's time to sell. And I'm obviously encouraging you to do what I hope happens in the market. But you may be in a position where it's good to accelerate your move now if you believe the market's going to take a downturn sometime over the next year or two. Now, would you miss the potential peak? Yeah. Would you miss it by a ton? Maybe not. It may happen sooner than we think. A lot of people are theorizing. An awful lot of economists now are on board with what we talk about here on the show, that it's no longer a question of if it's going to happen, but a question of when. And almost all the economists I listen to, and I don't just listen to the pessimists, I listen to some of the more optimistic folks as well. The general feeling among them is something is going to happen within the next 2 years. So I know I've been pushing this one for a long time. I thought we would see that moment where we would look back and go, that's when it started. I thought that would be last October. October tends to be the moment when weird things happen with the stock market. And I thought we would have seen that last October, and I was exactly the opposite of right. We actually had the most boring, stable October in the history of the stock market. I don't know what that means, but it means I wasn't right about the timing. Still think I'm right about where we're headed, but clearly we bought ourselves about another year or more simply by things not really starting to make that downward trend last October, which actually worked out great for me. For those of you who've been listening to a while, you know that I was sort of revving up to get my home sold last year. Ended up not doing that. I did some remodeling. I did a couple other things and was getting the place ready to go. And then when I got this close, my remaining two children, who happen to be twins, will be finishing high school this year. So the idea of selling with only a couple of months, 3 months, 4 months before the end of school didn't make a lot of sense. So I'm tying things more in with that, just for personal reasons. But I'm still on that train. I am still on I think it makes sense to sell my home now bandwagon. And I know I talk with you about data. I talk with you about what I'm seeing, and I see enough potential failure points to where I agree with an awful lot of the pundits and believe that something's going to hit. And even if you only believe in averages, right? Let's pretend you believe I'm completely full of crap and you believe all the other economists in general are full of crap, which isn't a horrible thing to assume. If you just look back at any one of the two graphs that I've shared with you, and you look at the intervals of recessions, right? We're due. we're past due for one. So it's really a relatively safe bet, just on the law of averages, that we will have a downturn within the next year. So I hope that's valuable for you. I think you're in a position where if you own property, it might be a good opportunity for you to sell it or at least reshuffle it so you're not in some of these more bloated markets, and maybe go to markets that have tended to be more resilient in recessions, because there's tons of them out there. We've talked about them on this show. Markets where when the downturn came, there was like minimal impact, less than 5%, less than 10%. And those are great areas to go. And they're pretty easy to find if you simply do that 10-year back check of the data. And most real estate agents are going to be able to provide that for you. All right, folks. I hope this has been interesting for you. I know it's not horribly sexy, but I think this inventory question is the question for real estate. This has to get solved before we start to see things turn, or the only other way it gets fixed is if we have a ridiculous economic downturn which negatively affects home prices. But then everybody gets hurt. So it's difficult to know where the right place is here. I would like to see more homes getting built personally, but that just isn't happening, and it doesn't look like it's going to happen in 2018. So thanks again for listening, everyone. I'll talk to y'all next time.